Oliver Sloup with us. He's with Blue Line Futures in Chicago. And Oliver, the Kansas City market looks extremely weak in the knees right now.
Yeah, a lot of the grain markets are under heavy selling pressure to start the week, and I think a lot of this is probably just continuation of last week's selling pressure. Last week, for the week, May corn was down 28.25 cents. May wheat was down 54.5 cents, and so we're seeing some follow-through selling. And I think probably some long liquidation just kind of feeding on itself. And we're at some pretty pivotal levels for some of these grain markets. 647 for May corn is going to be a big one to hold the line in the sand. A break and close below there, and you potentially see this market sub $6, not overnight, but I think that could be a continuing trend if we get a bigger technical breakdown. Look like it kind of looks like we're on the verge of at the moment.
So, yeah, I mean, it looks a little ominous if you look at a longer-term chart. What if you look at a December corn chart? What does that tell you?
Well, December obviously is going to be a lot more dependent on weather here in the following months. So you're going to see a lot of job owning back and forth, especially when South America gets through planting and harvest down there. And a lot of the attention is going to shift towards weather in the United States, which I think will probably keep the market from falling out of bed, knock on wood. But we really need to see some of these demand numbers get better, specifically for the corn market. It's been rather lackluster over the last couple of months, so that's what the bulls need to see. But here in the very near term, the selling pressure kind of looks a little bit contagious right now. Wouldn't be surprised to see a little bit more follow through on the sell side here in the near term. But another day or two like we're seeing today, and we're probably in oversold territory and probably due for a little bit of a relief rally. The $6 obviously has been a huge barrier for that new crop December contract. We haven't been able to really poke our head out above there in a long time with any sort of conviction. So until that happens, I think the bears have a little bit of an advantage here, and I think producers should probably take a look at protecting some of their downside risk here as well.
Well, Brazilian soybean harvest is running behind schedule. That is bullish, but on the other hand, everybody knows it's a humongous crop that's going to be coming in. That's very bearish. What do you see more impact on, the nearby contracts or on the new crop November contract if you look at a chart?
Yeah, looking at the May chart, 1507 to 1512 is significant support, and soybeans haven't really broken down like we've seen corn and wheat break down. As I'd mentioned, big down weeks in corn and wheat last week, but I think soybeans May contract is only down 3 cents or so. We're right at trend line support. A break and close below 1507. Sure, there's a little bit of psychologically significant support at $15, but really the significant support doesn't come in until about 1475. So today and tomorrow are going to be very pivotal sessions in determining price action going forward. Funds, I imagine, are fairly net long. We haven't had an updated commitment to traders report for a while. The CFTC released one last week, but it was for January 31st, so we're about a month behind. But CFTC has noted that we're going to get up to date on that commitment to traders report by mid-March. So I'm looking forward to that, certainly, to see how funds are positioned.
That's just insanity to drag it out for like a month and a half. It's just like those export sales numbers last year. All right, Oliver, thanks for the update on that. Now, if you would, sit tight.